Hi guys, I hope you all are doing well. My name is Kirti and today we are going to talk about cost sheet. I will give you a brief explanation about what is cost sheet, what are its components, advantages, effects, etc. So let's start first by knowing that what is cost sheet, that what is the definition of cost sheet. A cost sheet is a statement which represents the various costs incurred at different stages of business operations in a tabular format. It determines the total cost or expenditure made by the organization along with the cost incurred on each unit of a product or service in a particular period. The cost sheet of a business organization provides an insight into its performance and efficiency. It helps in competitive analysis and improvement of the business operation through cost reduction. So, it is a sheet where the company or the business can look at their costs that they have incurred. They can look at where they have incurred more and where they have spent less. Even if the cost sheet helps in inter and intra comparison as well. The company can find out that where they can reduce their cost and can increase their profit. So the next we talk about the types of cost sheet. There are two types of cost sheet: historical cost sheet and estimated cost sheet. The first one is historical cost sheet. The statement of cost which records all those expenses or costs that have already been incurred by the organization, that is the actual cost borne, direct or indirect, on the business operation in a particular period is called a historical cost sheet. The next one is estimated cost sheet. It is a cost statement which is prepared in advance before the actual production of goods or services take place. It is made to predict or determine the cost which will be incurred by the organization, the potential or profitability of the product or service, and to fix a suitable selling price. This type of cost sheet is usually prepared at the time of filing tenders or taking contracts to quote an appropriate price of the goods or services. The historical cost sheet is the cost sheet which includes all those costs that has already been incurred, whereas the estimated one is the sheet with which it is prepared in advance. That is, it will include the cost that will be occurred in the future. It is prepared so that the company can get an idea about how much they are going to spend and where they are going to spend their money. The next one we are going to talk about is the content, that is component of cost sheet. There are four components: prime cost, work cost, cost of production, and total cost. The last total cost is the sum of all these three costs. An organization needs to bear multiple types of overheads while carrying out the business operation. In a cost sheet, the following overheads or expenditure are presented systematically. That is, the first one is prime cost, second one is work cost or factory cost, third one is cost of production, and the final is total cost. So let's start with prime cost. Prime cost, the initial cost made for manufacturing a product, that is raw material, labor, wages, and other production related expenses, it termed as prime cost. Following is the equation for computing the prime cost, that is prime cost equals to direct material plus direct labor plus direct expenses, where direct material is calculated with the help of the formula, that is direct material equals to material purchased plus opening stock of raw material minus closing stock of raw material. Prime cost is the initial cost, that it includes all the cost that has occurred at the first stage or the initial stage. That stage is called manufacturing. While we manufacturing a product, the costs that we incurred are known as the prime cost. The second cost is factory cost or work cost. The cost is calculated by summing up the prime cost with the factory overheads and simultaneously adjusting the opening and closing stocks of the work in progress. It can be denoted as work cost equals to prime cost plus factory overhead plus opening stock of work in progress minus closing stock of work in progress. The various indirect overheads incurred at the factory premises can be computed with the help of the following formula. Factory overhead equals to indirect material plus indirect labor plus indirect expenses. So the factory cost itself includes the prime cost, and then it adjusts the opening stock of work in progress and includes factory overhead. The factory overhead is a summation of three things, that is indirect material, indirect labor, and indirect expenses. Now let's talk about all these indirect things that include the factory overhead. The first one is indirect material. The indirect material includes all the additional items used for manufacturing products but not directly contribute as a raw material for the finished goods. It can be anything like the oil, fuel, coal, stationery items, and other factory utilities. Also, the items which are though directly used for making a product but are inexpensive and small are considered as indirect material. These include thread, pins, sellotape, nails, nuts, etc. The second one is indirect labor. The labor or human resource engaged in all the activities other than manufacturing of goods or services which are essential to carry out the business and assist the production operations is called indirect labor. It includes salary paid to managers, cleaning staff, security staff, drivers, etc. The third one is indirect expenses. All the other overheads, which are neither directly contributing to the production operations nor they can be termed as labor or material expense, are called indirect expenses. These are the expenses made for running the business operation smoothly. These include advertisement, depreciation, rent, electricity, insurance, taxes, repair and maintenance, etc. So, indirect material includes all that material that are used for the manufacturing of the product, but indirectly. That is, these are coal, fuel, oil, etc. They are not directly used for the manufacturing, but they help in manufacturing of the product. Without them, even the manufacturing process can't be started. The second one was the indirect labor. It includes all that labor that don't help in manufacturing the product, but they help indirectly, like they are very essential for other activities like cleaning staff, security staff, drivers. The other one is the indirect expenses. These are the expenses that are not included in the business operations. They are electricity, rent, depreciation, but they are very important, but they are not included in the production process or in the manufacturing, but they are very important, equally as compared to indirect material and indirect labor. The third component is cost of production. Cost of production includes all the direct and indirect costs, including the material, labor, and other expenses. That is, production cost, factory cost, and the office or administration cost. The following formula denotes the computation of cost of production. Cost of production equals to work cost plus administration overhead. After making an adjustment of the opening finished goods and the closing finished goods to the cost of production, we acquire the cost of production of goods sold. Further, to calculate the cost of production of goods sold, the opening and closing stocks of finished products are adjusted with the cost of production. Its formula is cost of production of goods sold equal to work cost plus administration overhead plus finished goods opening minus finished goods closing. As we have seen that work costs include prime cost and the cost of production includes work cost. That means cost of production include prime cost plus work cost and administration overhead as well. But it also, after making adjustment of the finished goods, and we make adjustment by subtracting finished goods that are closing finished goods and the finished goods that were in opening. So the cost of production, the final formula for cost of production is the work cost plus administration overhead plus finished goods opening minus finished goods closing. The last one is the total cost, that is the summation of all three costs. The final value of a product or service can be determined after adding all the selling and distribution expense to the cost of production of goods sold. The formula to find out the total cost or cost of sale is total cost equal to cost of production of goods sold plus selling and distribution overhead. If the sale price of the product or service is known, the following method can be used to determine the profit. Profit equals to sales minus total cost. So the total cost is determined after including the cost of production with the selling by selling and distribution overhead. So in total cost include all the costs, as cost of production includes both the work cost and the prime cost. So total cost is equal to the cost of production plus selling and distribution overhead. And we can calculate profit, we all know, by sales minus total cost. Sales, that is the revenue minus total cost. So these were the components of the cost sheet. Now let's look at the format of the cost sheet. This format is an example of the historical cost sheet. It includes all the cost sheet. It includes all the costs that have already been occurred. It is not an example of the estimated. That means the estimated cost sheet that are made in advance. It is the one of the historical cost sheet. Now, the next one comes to the item required for preparation of the cost sheet. We have seen that in the prime cost we include raw material, and in the work cost we include work in progress. Stock of finished goods is required in the cost of production. Scrap materials, item included from cost, carriage inwards or carriage on raw material purchased, they are in the selling and distribution cost. So these are the six main items required for the preparation of cost sheet. That is stock of raw material, which was in the prime cost, stock of work in progress in the work cost, stock of finished goods, cost of production, and in the total goods, that one, the last one, selling and distribution overhead includes carriage inwards, scrap of material, transportation, all these costs. Now let's now look at the objectives of preparing a cost sheet. The first objective is the total cost and the cost per unit of the product can be ascertained. It helps the management to fix up the selling price on the basis of the cost per unit of the product after charging certain percentage of profit on cost. It also helps the management presenting a comparative study of current cost with the existing cost per unit. After proper comparison, the management can take the corrective measures. It helps the management while formulating suitable production policy. It is very helpful to submit a price quotation for tenders, and it also helps the management by supplying suitable information for management control. So the objectives of the cost sheet is that they can help, they provide for the comparison. The company or the business can compare their cost sheet with the previous year cost sheet. They can determine the cost for us, they can determine the selling price of a product by looking at the cost sheet, that how much cost they have incurred, then they can add a slight percentage of profit on it, and then they can determine the selling price. They help in the comparative study as well, and it helps total cost and cost per unit of the product can be ascertained, that what is the total cost and what is cost per unit. It helps the management to formulate suitable production policy. They can also form the policy by looking at the cost sheet. So these were the main objective of the cost sheet, that we can get by maintaining the cost sheet. It gives us very great advantages as well. So now let's talk about the method of preparation of cost sheet. Now how we prepare the cost sheet. We have already seen what are the components. So now let's consider by step by step. The step one, prime cost, direct material plus direct labor plus direct expenses. Step second, work cost, that is prime cost plus factory or indirect expenses. Step third, cost of production, which is work cost plus office and administration expenses. Step 4, total cost of production plus selling and distribution expenses. And what is profit? Profit equals to sales minus total cost. So we can clearly see here that the work cost include prime cost and cost of production include work cost. So the total cost includes all three costs. It is the summation of all three costs plus all the direct selling and distribution overhead. So now let's talk about the importance of cost sheet. We have seen its objective, so it must be serving as a lot of importance to the companies, as we have already seen. So the cost sheet helps with a number of essential business process. The first one is determining cost. The main objective of the cost sheet is to obtain an accurate product cost. It gives you both the total cost and cost per unit of a product. Fixing selling price. In order to fix the selling price of a product, you need to create a sheet so you can see the detail of its production cost comparison. It helps the management to compare the current cost of the product with the previous per unit cost for the same product. Comparison on cost helps the management take corrective measures if costs have increased. Fourth, cost control. The cost sheet is an important document for a manufacturing unit as it helps in controlling production cost. Using an estimated cost sheet aids in monitoring labor, material, and overhead cost at each step of production. Decision making. Some of the most important decision management makes are based on the cost sheet. Whenever a business needs to produce or buy a component or quote price for its goods on a tender, manager refers to the cost sheet. So we have already seen in the objectives that it helps to determine the cost, that how much total cost we have incurred or what is the cost per unit. It helps in fixing the selling price, that what will be the selling price. We can conclude by looking at the cost sheet. We can see what is the total cost that we have incurred on that product, then we can add a profit percentage, and then we can determine the selling price. It helps in cost control also by preparing the cost sheet. We can see that where we have spent more and how we can control it. Even it helps in the comparison as well. We can compare our cost sheet with the previous year cost sheet, or we can compare the current cost or the previous cost of the product. So now let's talk about what are the advantages of cost sheet. So cost sheet is an essential statement for the organization engaged in the production of goods or services. For the some of the benefits of preparing a cost sheet. A cost sheet provides per unit cost of a product or service which the organization incurs at every stage of business operation, which helps the management to analyze and control such overheads. It also helps in deciding selling price of a product or service based on the cost incurred and profit expected out of it. The cost managers or production managers can study the past figures of the company's cost sheet to ensure the efficiency of business operations and for eliminating the non-productive expenses. It also acts as a base for comparing the actual cost incurred with that of the estimated or budgeted cost to find out any deviation and take the necessary corrective actions. The preparation of a cost statement is an essential document for the application of case-in costing in the business. A cost sheet provides for the adjustment of the opening and closing statement, closing stocks of raw material, work in progress, and finished goods. So we have already seen in objectives and importance as well that it can help in determine us total cost and the cost per unit. It helps us to fix the price, selling price. It helps in the comparison of the previous and current cost. Even it helps in the comparison of the budgeted sheet, that is estimated cost sheet that we have prepared in advance, and the cost that we have actually incurred, so that we can see that where we have spent more and where is the non-productive expenses that we can incur, and then we can reduce our cost. So these are the advantages of cost sheet. The objective important advantages are somewhat similar only, but because but the cost sheet it serves a very important role because it helps the business and the company to increase their competitiveness. They can compare the cost sheet of their with the other companies, and they can reduce their cost as well. It gives you their competitive analysis, and it helps the company to reduce their cost. Now the last topic that we are going to talk about today is the difference between a cost sheet and the production account. Now I will tell you the six points so that you can clearly get that what is the difference between a production account and a cost sheet. So the first one is the form, that is based on double entry principles. The production account is based on double entry principles, whereas the cost sheet is based on actual and estimates. Cost sheet is prepared for each job, whereas product account is prepared for each production and department. It is based on actuals, whereas cost sheet is based on actual and estimated. Product account is just an account, whereas cost sheet is only a statement. Expenses are classified to ascertain different divisions of cost. Expenses are not classified in this account. That is, expenses are not classified in production account. The main objective of cost sheet is to reveal the total cost of production as well as cost per unit of output, whereas the main objective is of production account is to reveal not only the total cost and cost per unit but also the profit earned or loss suffered on the sales. So I'm going to repeat that once again for you. That is, the production account is just an account, whereas the cost sheet is only a statement. Production accounts is based on double entry principles, whereas the cost sheet is just a memorandum statement and does not form part of double entry system. Production account is based on actuals, whereas cost sheet is based on actual and estimates. Production account is prepared for each production department. Cost sheet is prepared for each job. Production expenses are not classified in the production account, whereas expenses are classified to ascertain different divisions of cost in cost sheet. The main objective of product account is to reveal not only the total cost and cost per unit, but also the product earned or loss suffered on the sales. Whereas the main objective of the cost sheet is to reveal the total cost of production as well as the cost per unit of output. So I hope that I have given you a great knowledge about cost sheet and all of your doubts related to cost sheet has been cleared. Thank you for listening to me.